This is Carl from Kansas with the three things I'm watching for Tuesday, October the 14th. Shipping fee day is what we have going on here today. United States and China going to put shipping fees on each other, on their, whoever's ships are being loaded. It's really just kind of a bunch of nothing that's taken place there after we get some clarification and some exemptions that have came out and some changes. It now appears that mostly the egg products will be spared from any additional fees. Most increases will go on container type products, factors like that, services. Not so much on the egg sector, and that's going to help us out a lot because that would have added about $1.66 to our soybeans going into China, completely removing us from any hope of trade there. Looks like we're going to have a little cooler heads in the market. Not saying we're going to see, a flood of Chinese business from this, but it does open the door for a little bit less conflict, let's put it that way. And this brings me up to my number two thing, China. Their soybean needs. China needs 400 million bushels of soybeans between now and January. The sources to draw them from are very limited. Bottom line, you get a little bit out of South America that China can probably buy yet for old crop soybeans, but doubtful very much. They just bought a chunk out of Argentina and Brazil. They might have some for sale, but the source pool is declining unless it's the United States. We have some soybeans, and again, our pool has declined as well. Look at domestic consumption, but the bottom line is we do have some exportable soybeans. We have them baked into the balance sheets. Like I said, China needs 400 million bushels. I doubt they all come from the United States, but we could easily see, a good portion of that. China's other alternative is to use domestic soybeans, and unless something miraculous has happened in the past year, that would benefit the United States as well, because you cannot store South American soybeans. The quality, you have major quality issues when you do that. So, bottom line, the way it's looking, China will either import soybeans from the United States if they absolutely have to, or use domestic reserves, which opens up the door for exports there. So, pretty interesting development starting to take place in China. I wouldn't be too surprised they didn't show up here before too long in the export numbers. Soybeans starting to firm a little bit. China likely shopping around, and even if they were, government's closed, we wouldn't know it. Third and final thing today, CONAB is going to come out with their initial 25-26 crop estimates. They're looking at a soybean crop of 179 million metric tons and a corn crop of 141 million metric tons. USDA currently using a soybean crop of 174 million metric tons in balance sheets, so not a big change there. Corn, however, the USDA using a corn production number out of Brazil of 131 million metric tons. CONAB does tend to be they're pretty optimistic on their yields a lot. We'll put it that way. A corn crop up 10 million metric tons seems a little bit of a stretch at this time, but given the current planting pace and Brazil's domestic demand, anything is possible, and that's the same on soybeans. I don't care so much about the production numbers. It's the same as in the United States. Don't tell me how much you're going to produce. Tell me what your stocks to use at the end of the year is, and I'll tell you if it's going to be a big enough crop. That is what we're looking at. That is what we need to focus on. Domestic demand, like I said, ratcheting up in Brazil. Just because we'll see bigger crops doesn't mean we'll see more export competition in the global market. Those are the three things I'm watching today.